Hello, and thank you for joining us at xm.com for this Forex Preview video. We'll be having a look at U.S. data. I'm Christina Marujas, and joining me today is Marios Hadjikyriacos, investment analyst. Now, Marios, even though economic numbers have been dismal lately, it appears that they haven't really scared investors who are driven by other factors, which we will look at in a moment. However, I think it's good to have a look at the data out of the U.S. this week. We've got durable goods and weekly jobless claims out on Thursday, followed by consumption and income numbers on Friday. What is forecast for these reports?
Hello, Christina. Well, the forecasts are horrible, as has been the case with every piece of economic data lately. So durable goods, for example, on Thursday are expected to have dropped by 18% from the previous month. That follows another 15% drop in March. And, this is a proxy for business investment by companies. So that shows you that business investment is declining quite quickly. Now, the other piece of interesting data this week, also on Thursday, are jobless claims. Now, those are expected to show that another 2.1 million Americans filed for unemployment benefits last week. That would be a slowdown from recent weeks, but it's still a very disturbing number. And if it's confirmed, that would bring the total job losses over the past 10 weeks to roughly 41 million, which equals about 1/4 of the entire US labor force. The real question is, will any of this matter? To which the short answer is probably not. We've seen a lot of terrifying economic data lately, but none of it has really shaken the markets, and I don't think this week will be an exception. The story is that we already know we're in deep recession, so most of the carnage has been signaled well in advance, so traders are really shrugging off the horrible numbers on the way down.
Despite weak numbers we've been seeing lately, the dollar hasn't been affected, whereas stocks have also been enjoying their rally. But given the looming threat of a second wave of virus infections and the seething U.S.-China tensions, do you think this risk appetite is sustainable?
Well, that's the tricky part. So let's take stocks first. Yes, they have rallied quite a lot, and that has come despite many risks surrounding them. But on the other side of the equation, you have central banks pumping liquidity everywhere. That's pushing up asset prices. So it's a difficult equation to navigate in a sense. Now, as far as the dollar is concerned, it has been acting like a safe haven throughout this crisis, and I think that, if anything, the outlook from here is still cautiously positive. Why? I think that there's still a high risk of a pullback in both risk appetite and stocks. A lot of good news has been priced back into stock markets, and at current levels, stocks imply that this recession will be relatively harmless, which I think is far too optimistic. So I think we could see a setback in risk appetite over the coming weeks that could therefore boost the dollar, which has been acting like a safe haven. And what might the trigger be for that? I think it's going to be US-China tensions, and specifically a lot will depend on what happens with Hong Kong. If the US, for example, moves forward to revoke its status as a special trading hub, that could have ripple effects for the entire market. Now, arguing the opposite side of this equation, what might bring the dollar down? I think the two biggest threats for the dollar would be a vaccine being developed for the virus, or the EU reaching a deal for debt sharing. But I think both of those are unlikely for now, and therefore the near-term outlook for the dollar seems cautiously positive to me.
Marios, thank you very much for your insight and for joining me today. And thank you for watching this Forex Preview video here at xm.com.